And welcome the opportunity to present to the TIA. I was reflecting as the legislation finally received royal assent on September the 8th. It was almost 3 years to the day that the Cutler report was issued. And there was a long journey and a bit of an adventure that advisors, ATO, Treasury and Oz Industry went through to actually come up with a new regime for the R&D tax incentive that hopefully will take us through the next decade. And then on reflecting on that, one of my favourite movie genres is Harrison Ford's series with Indiana Jones, with the various crusades that he goes on. And I'm sort of at the end of that movie because by the time you get to the feedstock provisions, you actually have to go cross some bridges around whether you've got a core activity, and then to the extent that you've got a production-related activity, is it directly related to the core activity? Have you satisfied the dominant purpose test? And then, by then, of course, a few of the bridges that you've been crossing have collapsed and blown up behind you, and then you've got, there's some large materials expenditure that I've incurred, and how do I do the feedstock calculations? So what my talk is about is around what is feedstock, what are the changes in the law, some practical issues for record keeping, and so if you've actually gone through the journey and you've already done your experiments, etc., but you haven't actually kept the records of the feedstock, you might be actually missing out on the journey. So like a good Hollywood movie buff, you should always be prepared that there's going to be a happy ending, that you might actually sell some of the product that you're manufacturing, and that there may be, in fact, be a feedstock claim, notwithstanding Bill's comment that if you sell it, there'll be an adjustment, because the adjustments to your assessable income, and that might occur in a later year, and actually if you're a SME, it gives you a 5% one-off benefit. So what I'll do is I'll walk you through the legislation and the ATO's fact sheet, which actually covers the new legislation and actually gives us a little bit of guidance around that. And I'll just touch on a few areas where perhaps the guidance to date hasn't actually sort of updated to the new terminology. So the first thing is, what is feedstock? Feedstock applies to expenditure on goods or materials. So it doesn't apply to people costs, consultants, etc. It's only costs that relate to goods or materials. And that's an important definition. So if you're doing production trialling, etc., and the production labour that's directly related to the project, that would not count as feedstock. Even though in your internal accounting systems, quite often that sort of activity is actually shown as a byproduct cost or a feedstock cost. And to be a feedstock input, it actually needs to be transformed or processed during the R&D activities for which you've got a claim. Added to that will be energy, and a new one, depreciation for tax purposes, or the decline in value of assets will in fact be included. So the new R&D incentive, of course, is in the 97 Act. The old feedstock provisions are in the 1936 Act. And the change between the old and the new essentially is this. The old 1936 Act would give you a deduction for residual feedstock expenditure, which is your feedstock input less your feedstock output. The new provisions actually create taxable income in respect of